the equity raise has been completed. We got really good uptake, really good feedback, and really good participation from our existing shareholders. So I'm really thankful for the institutional shareholders for doing that. We also launched an SPP, or we're about to launch an SPP, very much focused on making sure that our retail shareholders can participate in these sorts of things as well. It was a pretty small acquisition that we were funding. It was the minority interest in the M5 in Sydney, which we've owned for a long, long time. We've owned a portion of that since 2007. But we were fortuitous to be able to acquire the minority interest. It was a really good deal for us, again, albeit reasonably small, but a $468 million purchase price, immediately free cash accretive, value accretive, sort of ticks all the boxes, strategically makes a lot of sense for us. And we were very keen to make sure that we could get the funding away fairly quickly. The usual entitlement offer process, as you know, just takes quite a long time for such a small deal. We thought the pro rata placement was a really good transaction for us, coupled with an SPP again, so that our retail shareholders get to participate in that. So they'll get all their information over the next couple of days, and then there's a few weeks for them to participate. The results themselves for the year were quite strong. So we had 10.3% growth in proportional revenue, 12.3% growth in proportional EBITDA. So really a mix of good underlying growth from the existing business, but very importantly, our new additions, our new acquisitions are going really well. So we acquired the A25 in Montreal last year. We had the full year benefit of this during the year. The integration's complete. It's ahead of our investment case, not too far ahead of our investment case, but you're always rather be on that side of the ledger. So really happy with the A25 acquisition in Montreal. And then very, very importantly, Westconnex, which we made a big investment into last year, albeit very early days. It's only been open for a few weeks, but the M4 tunnels opened a few weeks back, and again, we're ahead of the investment case there. So it's one of those touch wood things, and we try not to get too excited, but when these things open, you always rather be on the favourable side of the ledger rather than the negative side of the ledger. So we're really pleased with how that's going, and again, the integration has gone really well there. Really good cost discipline during the period. So we kept our cost growth to around 2%. In fact, if you exclude foreign exchange translation, it was 0.7%. You'll recall that when we acquired Westconnex, we really said that we were going to focus on maximising our operational efficiency and driving returns for our investors, and we'd like to think that we've really done that during the period. So great cost outcomes. And then look, traffic generally has been a bit of a mixed result. It was probably the main point of conversation over the last few days with our investors, and really on the back of the fact that we've got very strong traffic coming through and price increases coming through in North America. So we're really happy with that. In Melbourne, we've got a bit of a mixed bag. We're doing really well on the Western Link, which is the section that takes you up to the airport. That's performing really well. We do have some congestion issues that we're trying to work our way through on the Southern Link with the tunnels. We know some of it's being caused by a lot of the construction activity and the bottlenecks being caused at either end, particularly with the Westgate Bridge and the Westgate Freeway. So we're trying to find ways to address that over the coming months, but nothing of concern there. It's still going quite well. Brisbane was really good. There's obviously been a lot of disruption on our network over the last year or so, and thankfully we're through that. So Logan is open, but it'll be fully open in the next couple of weeks. Importantly, we get our truck toll increases coming through in the next couple of weeks for our Brisbane assets. And now that we're through all that construction activity, then we're pretty confident we're going to get some good traffic uplift in Brisbane. And in both Melbourne and Brisbane, we're also seeing trucks outpace cars, which is always a good sign for us. The interesting one, I guess, and got a bit of attention was New South Wales, where it was a bit more mixed. We did come off a really high base last year, particularly in the last quarter and the last half of last year. We had some really strong truck growth, in particular, a lot of tunnelling work and spore removal and a lot of construction activity. So we're just seeing that pull back a little bit, and there was a bit of conversation over the last couple of days about whether or not that's somewhat of an indication of a softer economy. And look, we think it probably is to a degree, in addition to the broader issues around the strong quarter comps that we had to deal with. But We're not alarmed by it. We're not concerned about it, but yeah, we think that there's probably a little bit of softening economy again coming with Sydney coming off a higher base relative to Sydney and Melbourne, relative to Brisbane and Melbourne over the last couple of years. So I guess quick summary again, the results have been solid. Free cash coverage has been good for our distribution. We announced a 62-cent distribution, 5.1% growth for next year, so that's in line with previous expectations. The outlook's fairly favourable. Integrations have gone well. Our new assets have opened up nicely, and hopefully we can have a good year again in 2020.